Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CCC Intelligent Solutions Holdings Inc. quarterly report. CCC Intelligent Solutions Holdings Inc. offers a wide range of businesses and services through its cloud-based SaaS platform. These include insurance solutions, workflow estimating, total loss, casualty, subrogation, automotive claim handling, disability claim handling, and workers' compensation claim handling repair solutions. Estimating, network management, repair workflow, repair quality, and payroll ecosystem solutions. Parts solutions, automotive manufacturer solutions, diagnostic service provider solutions, and payments international solutions. These services cater to various stakeholders in the property and casualty insurance economy, including insurers, repairers, automakers, parts suppliers, lenders, and others. The stock price of CCC Intelligent Solutions Holdings Inc. has dropped by over 15.95% in the past year due to a combination of factors. Executive turnover and insider selling, concerns over slow growth and business practices, high P/E ratio and valuation questions, uncertain near-term growth, declining net dollar retention, lower insurance claims volume, potential internal restructuring, and legal challenges speculation, and margin dilution from acquisition have all contributed to the decline. Despite reporting strong financial performance in some quarters, these negative pressures have outweighed the positive earnings results. The company's high P/E ratio has raised questions about its valuation, while concerns over slow growth and business practices have led to a decrease in investor confidence. The impact of lower insurance claims volume on revenue and the potential for internal restructuring and legal challenges have also added to the uncertainty surrounding the company's future prospects. Overall, the stock price decline can be attributed to a mix of operational, financial, and market-related factors that have created a negative sentiment among investors. The primary drivers of revenue growth or decline can be summarized into several key factors. On the growth side, the company has seen an increase in sales of its X product/service, expansion into new markets, and growth in existing customer relationships. Additionally, software subscription revenues have increased by $79.5 million, while cost of revenue has also risen by $33.1 million. The acquisition of EvolutionIQ for $410.4 million has also contributed to revenue growth. On the decline side, a decrease in sales of Y product/service and disruption in supply chain operations have led to revenue decline. Furthermore, economic downturn affecting industry demand has also had an impact on revenue. However, it's worth noting that customer retention remains high at 99%, indicating a strong relationship with existing customers. Overall, the company's revenue growth is driven by its ability to expand into new markets and grow its software subscription revenues, while revenue decline is primarily due to disruptions in supply chain operations and economic downturn affecting industry demand. The company is generating a significant amount of positive operating cash flow. For the 3 months and 9 months periods ending September 30, 2025, the company reported operating cash flows of $94,767 and $196,315 respectively. These figures indicate that the company's operations are producing sufficient cash to cover its expenses, resulting in a positive operating cash flow. The company's financial summary reveals a moderate increase in its debt level and interest expenses over the past year. Debt level: long-term debt has increased by $210,155 from $761,053 to $971,208. The total long-term debt also rose by 28% from $776 million to $993.5 million. However, this growth is not drastic. Interest expenses. The interest expense has seen a slight increase of $1.7 million for the 3 months and $3.5 million for the 9 months ended September 30, 2025. The weighted average interest rate on term loan decreased from 7.8% to 6.3%, indicating a potential cost savings. Overall, while there is some growth in debt levels and interest expenses, it does not appear to be significant or alarming. The domestic segment of a company performed mixed in terms of revenue growth. While it did not provide specific financial information for the 3 months and 9 months ended September 30, 2025, its revenue increased to $265.4 million in 2025 compared to $236.7 million in 2024. In contrast, the other segment experienced a slight decline in revenue from $1.72 million in 2024 to $1.718 million in 2025. The company's management is optimistic about its future outlook, driven by several key strategies. The acquisition of EvolutionIQ has broadened the company's portfolio of AI-based solutions and expanded into new adjacencies. Management aims to power the insurance economy with its data, network, and platform, while investing in research and development to enhance solution offerings. The company's revenue base is strong and stable, with a vast majority of customers continuing to use their solutions and renew subscriptions. However, management acknowledges that the acquisition had a significant impact on revenue growth and cost structure. To mitigate this, they are focusing on recurring core business operating results and managing debt refinancing costs to optimize its financial position. Management believes that its cash and cash equivalents will be sufficient to fund operations for at least the next 12 months, providing a stable foundation for future growth. Overall, the company's strategy is centered around investing in new solutions, expanding into adjacencies, and returning value to shareholders through stock repurchases. The company has made several significant transactions through acquisitions and divestitures. Key acquisitions include EvolutionIQ for $674 million in fair value, interest rate swap agreements entered into in February 2025, and interest rate cap agreements entered into in August 2022. On the other hand, the company has also engaged in divestitures, including the redemption of series of preferred stock by CCC Cayman on March 17, 2025, and the redemption of private warrants for an aggregate 3,809,200 shares of common stock in May 2024. The company's financial summary reveals its commitment to rewarding shareholders through dividend payments and share buybacks. As stated on page 28, common stockholders are entitled to receive dividends as declared by the board of directors. Furthermore, the company has a history of repurchasing shares, with a notable instance being the purchase of 7 million shares for $72.3 million. This demonstrates the company's dedication to returning value to its shareholders through both dividend payments and share buybacks. That concludes the financial summary for CCC Intelligent Solutions Holdings Inc. Feel free to comment below, and I will be happy to answer them when possible.